Based on the historical data and forecast, Bitcoin has shown significant volatility, with a recent downtrend. The RSI consistently dipped below 50, and even approached the oversold level of 20 on April 6, indicating potential buying opportunities. The forecast data projects further declines, suggesting a bearish outlook for the next week. Considering the support level at 67800 and the recent price action, a contrarian strategy focusing on short-term bounces appears viable. Therefore, I recommend a strategy that combines RSI and Bollinger Bands to capitalize on short-term rebounds. My proposed strategy involves entering long positions when the RSI is below 30 and the price touches the lower Bollinger Band. Specifically, on April 13, 2025, when the forecast price is 78,300, the RSI is expected to be below 30, and the price is near the lower Bollinger Band, enter a long position at $78,300. Set a stop loss at $77,800, just below the lower Bollinger Band to mitigate potential losses if the downtrend continues. The initial target price is $80,000, aligning with the center of the Bollinger Bands. If the price reaches $80,000, consider moving the stop loss to break even to protect profits and potentially ride further upward momentum. This strategy aims to capture short-term bounces while managing risk with tight stop-loss orders. Based on the historical data and forecast, Ethereum shows a clear downtrend, particularly evident in the recent price action. The price has consistently been declining, with a significant drop observed on April 6, 2025, closing at $1,580. The forecast for the next week indicates continued downward pressure, with prices projected to reach $1,510. Considering the RSI consistently below 50, with recent readings nearing oversold levels, around 28.2, suggests a potential short-term bounce, but the overall trend remains bearish. We will implement a short-selling strategy, capitalizing on this downward momentum. Our strategy involves entering a short position at $1,690 on April 7, 2025. Given the strong downtrend and the support level at $1,550, we will set a stop loss at $1,760 to protect against a potential short-term reversal. The initial target price will be $1,570, aligning with the forecast for April 7, 2025. If the price action continues downwards, we will adjust the target price to $1,510, based on the forecast for April 13, 2025. The Bollinger Bands also support this strategy, as the price is consistently trading near the lower band, confirming the bearish trend. This approach aims to maximize returns while minimizing risk through strategic stop-loss placement. Based on the historical data and forecast, XRP has shown a downtrend, with the price fluctuating between a support of $0.556 and a resistance of $2.09. The RSI indicates that XRP is currently in the oversold territory, with values below 40 for several days. The Bollinger Band suggests that the price is approaching the lower band, indicating a potential rebound. Combining these factors, I recommend a contrarian strategy, anticipating a short-term bounce. We will enter a long position at $1.96, placing a stop-loss order at $1.91 to limit potential losses. The initial target price will be $2.02, aiming to capitalize on the anticipated rebound. To refine the strategy, we'll incorporate the RSI and Bollinger Band signals. If the RSI crosses above 40 while the price touches the lower Bollinger Band, it strengthens the buy signal. If the RSI reaches 80 and the price touches the upper Bollinger Band, it signals a potential exit or take profit. Therefore, a secondary target price will be $2.09, contingent on the RSI reaching 60 and the price nearing the middle Bollinger Band. This multi-layered approach balances risk and reward, optimizing for high returns while mitigating potential downsides. Based on the historical data and forecast, BNB shows a downtrend. The RSI consistently dipped below 50, reaching a low of 35.2 on April 6, indicating an oversold condition. The forecast for the next week predicts a continued decline, with prices dropping from $576 to $547. Considering these factors, I recommend a short position strategy. Entry price will be $576, with a stop loss set at $588, just above the upper Bollinger Band to avoid false signals. The initial target price will be $564, aligning with the forecast for April 8. If the price breaks through $564, a secondary target of $547 can be considered, corresponding to the final forecast price for April 13. To optimize this strategy, we'll incorporate RSI confirmation. We will enter a short position when the price is at $576 and the RSI is below 40. The stop loss remains at $588. The first target price is $564, and if the price reaches this level, we will reassess based on the RSI. If the RSI is still below 40, we can move the stop loss to the entry price of $576 and set a second target at $547. This combined approach, using both price action and RSI, aims to maximize returns while managing risk effectively in this downtrending market. Based on the historical data and forecast, Solana exhibits a clear downtrend. The price has been declining from $140 to a forecast of $105 over the past 2 weeks. The support price remains consistently at $99.9, while the resistance fluctuates but remains below $108, reinforcing the bearish sentiment. The RSI consistently dips below 50, particularly falling to 32.6 on April 6, 2025, indicating oversold conditions. The Bollinger Bands show a contraction, with the price consistently trading near the lower band, further confirming the downward momentum. Therefore, I recommend a short selling strategy. My strategy involves entering a short position at $114. Given the oversold RSI and the bearish trend, a stop loss should be placed above the upper Bollinger Band at $145 to limit potential losses if the price unexpectedly reverses. The initial target price will be the support level at $99.9. If the price breaks through the support, the target can be lowered to $95. This strategy combines technical indicators and price action to capitalize on the current downtrend, while carefully managing risk with appropriate stop-loss levels. Based on the historical data and forecast, Dogecoin shows a downtrend. The RSI consistently falls below 50, indicating weakening momentum. The forecast for the next week predicts further price declines, reaching as low as $0.148. The support price of $0.144 acts as a significant barrier. Given these factors, I recommend a short position strategy. Specifically, enter a short position at $0.169. Set a stop loss slightly above the recent high of $0.174, at $0.174, to limit potential losses if the price unexpectedly reverses. The initial target price should be the support level of $0.144. To refine the strategy, incorporate the Bollinger Bands. The price is currently trading near the lower band, suggesting a potential for further downside movement. I would implement a tiered target strategy. The first target is $0.144, as mentioned earlier. If that target is hit, consider moving the stop loss to break even. If the price continues to decline, the second target is $0.14. This tiered approach allows for profit-taking while mitigating risk. This combined strategy leverages both RSI and Bollinger Bands to maximize potential returns while managing risk effectively. Based on the historical data and forecast, TRON shows a slight upward trend with some consolidation. The RSI fluctuating around 50 indicates a neutral momentum, but nearing oversold conditions on April 6 at 46.4. The Bollinger Bands show that the price has been oscillating within the bands, suggesting sideways movement with potential for volatility. Considering these factors, I recommend a cautious long strategy. The entry price should be $0.227, coinciding with a recent dip and approaching the lower Bollinger Band. A stop loss should be placed at $0.212, just below the support level, to mitigate potential losses. The target price should be $0.238, aligning with the recent resistance level. To refine this strategy, I'll incorporate RSI signals. When the RSI falls below 20, oversold, it signals a potential buying opportunity. However, the current RSI is not at that level. I will also consider the Bollinger Bands. When the price touches the lower band, it can be a potential buying opportunity. Combining these signals, if the price drops to $0.223 on April 13th, which is forecast, and the RSI is below 30, then I would enter a long position with an entry price of $0.223, a stop loss at $0.212, and a target price of $0.238. This blended strategy leverages both momentum and volatility indicators for a more robust approach. Based on the historical data and forecast, Cardano demonstrates a clear downtrend, with consistently decreasing closing prices over the past 2 weeks and a further projected decline in the upcoming week. The RSI consistently hovers below 50, indicating a weakening momentum, and has even dipped below 34, confirming an oversold condition. The Bollinger Bands are narrowing, suggesting increasing volatility and a potential for a breakout. Considering these factors, I recommend a short position strategy. Enter a short position at $0.654. Place a stop-loss order at $0.661 to protect against a sudden upward price movement. Set a target price at $0.586, aligning with the forecast price and the lower Bollinger Band. To refine the strategy, I will incorporate RSI and Bollinger Band signals. When the RSI falls below 20, it signals an oversold condition, which is currently observed. The narrowing Bollinger Bands suggest a potential breakout. Combining these signals, I recommend initiating a short position at $0.654. A stop loss should be placed at $0.661, and a target price of $0.586 is set based on the forecast. This portfolio combines the trend analysis, RSI, and Bollinger Bands, aiming for high returns while managing risk effectively. Based on the historical data and forecast, Dogecoin shows a clear downtrend. The price has been consistently declining from April 6, 2025, with a forecast indicating further drops. The RSI consistently falls below 50, indicating a weakening momentum, and the forecast predicts RSI will continue to fall. The Bollinger Bands are widening, suggesting increased volatility and a potential for further price drops. We will implement a short selling strategy. Entry price will be $3.38, with a stop loss at $3.41 to protect against a potential reversal. The initial target price is $3.14, aiming to capitalize on the anticipated downward trend. To refine the strategy, we will use a tiered target approach. Once the price reaches $3.14, we will move the stop loss to break even, securing the initial investment. If the price continues to decline, the next target will be $3.09, followed by $2.91. The support price of $2.53 will be the final target. This multi-stage approach allows us to maximize profits while minimizing risk. The overall portfolio will consist of 80% short positions and 20% in cash to manage risk. Based on the historical data and forecast, Chainlink shows a clear downtrend. The price has been consistently declining from $15.1 to $10.9, with support at $10.5 and resistance at $11.3. The RSI consistently below 50 indicates a bearish momentum. The Bollinger Bands are narrowing, suggesting decreasing volatility, and the price is trending toward the lower band. Given this bearish outlook, my strategy is to implement a short selling position. I recommend entering a short position at $12.2. The stop loss should be set at $12.7, just above the upper Bollinger Band, to protect against a potential short-term reversal. The initial target price is $10.5, the established support level. To refine this strategy, I'll incorporate the RSI and Bollinger Bands. When the RSI falls below 30, indicating an oversold condition, I will consider covering the short position at $11.1. Conversely, if the price touches the lower Bollinger Band, I will consider tightening the stop loss to $12.4. The overall portfolio will prioritize the short selling strategy, with adjustments based on RSI and Bollinger Band signals. The final target price is $10.9. This combined approach leverages the prevailing downtrend while incorporating technical indicators for risk management and potential profit optimization. Based on the historical data and forecast, Quant exhibits a clear downtrend. The price has been consistently declining from March 24, 2025, to April 6, 2025, and the forecast for the week of April 7, 2025, to April 13, 2025, projects a continuation of this downward momentum, with prices ranging from $64.7 to $61.3. The RSI consistently remains below 50, indicating a bearish sentiment, and dips below 30 on several occasions, suggesting oversold conditions. Combining this with the downward trajectory of the Bollinger Bands, which are consistently contracting, reinforces the expectation of further price declines. Therefore, I recommend a short selling strategy. The optimal entry price for this strategy is $64.7, coinciding with the start of the forecast period and the recent downtrend. A stop loss should be placed at $65.5 to protect against a potential short-term reversal. The initial target price is $61.3, based on the lowest forecast price. If the price reaches $61.3, we can consider tightening the stop loss to $63.9 and setting a new target price at $62.4. This tiered approach allows us to capitalize on the expected downward trend while managing risk effectively. This strategy balances the signals from the RSI, Bollinger Bands, and forecast data for maximum efficiency. Based on the historical data and forecast, EOS shows a volatile trend with a recent upward momentum. The RSI indicates periods of oversold and overbought conditions, while the Bollinger Bands reflect the price volatility. Considering the support price of $0.693 and the resistance price of $0.858, I recommend a strategy combining RSI and Bollinger Bands for optimal returns. My strategy involves a tiered approach. First, on April 7, 2025, when the forecast price is $0.697, enter a long position at $0.697. Set a stop loss at $0.689, just below the forecast price, to protect against a sudden downturn. The initial target price is $0.734, aligning with the forecast for April 8, 2025. If the price reaches $0.734, consider taking partial profits. If the price continues to rise and breaks above the upper Bollinger Band, which was $0.716 on April 6, 2025, adjust the target price to $0.782. However, if the RSI reaches 80, indicating overbought conditions, consider taking full profits or adjusting the position to a break-even point to avoid potential losses. This strategy balances potential gains with risk management, capitalizing on the anticipated upward trend while mitigating downside risk. Based on the historical data and forecast, Solayer shows a clear uptrend with consistently breaking through resistance levels. The RSI values have generally remained above 50, indicating bullish momentum, and the forecast prices suggest continued upward movement. The Bollinger Bands have been expanding, suggesting increased volatility and potential for further price swings. Therefore, I recommend a long position strategy focusing on capitalizing on this upward trend. We will enter a long position at $1.58, coinciding with the first day of the forecast period and a recent price surge. A stop loss will be placed at $1.48, just above the established support level, to limit potential losses. The initial target price will be $1.75, aligning with the final forecast price, aiming for a significant profit. To refine this strategy, we will incorporate RSI and Bollinger Band signals. If the RSI dips below 30, indicating an oversold condition, we will consider an additional entry at the lowest point of the Bollinger Bands. Conversely, if the RSI reaches 75 or above, suggesting an overbought condition, we will consider taking partial profits or tightening the stop loss. The portfolio will prioritize the long position strategy with adjustments based on RSI and Bollinger Band signals to maximize returns while managing risk. We will aim to achieve a 10% to 15% return on investment within the forecast period. Based on the historical data and forecast, TRON shows a slight upward trend with some consolidation. The RSI fluctuating around 50 indicates a neutral momentum, but nearing oversold conditions on April 6 at 46.4. The Bollinger Bands show that the price has been oscillating within the bands, suggesting sideways movement with potential for volatility. Considering these factors, I recommend a cautious long strategy. The entry price should be $0.227, coinciding with a recent dip and approaching the lower Bollinger Band. A stop loss should be placed at $0.212, just below the support level, to mitigate potential losses. The target price should be $0.238, aligning with the recent resistance level. To refine this strategy, I'll incorporate RSI signals. When the RSI falls below 20, oversold, it signals a potential buying opportunity. However, the current RSI is not at that level. I will also consider the Bollinger Bands. When the price touches the lower band, it can be a potential buying opportunity. Combining these signals, if the price drops to $0.223 on April 13, which is forecast, and the RSI is below 30, then I would enter a long position with an entry price of $0.223, a stop loss at $0.212, and a target price of $0.238. This blended strategy leverages both momentum and volatility indicators for a more robust approach. Based on the historical data and forecast, Zcash shows an overall upward trend, although with some volatility. The RSI values fluctuate between 47.4 and 64.8, indicating periods of both neutral and slightly overbought conditions. The Bollinger Bands have been widening, suggesting increasing market volatility. The forecast for the next week predicts a slight downward correction initially, followed by a potential rebound. Considering the RSI oversold level of 20 and overbought level of 80, I propose a combined strategy. First, when the RSI falls below 40, we will initiate a long position at $35.6. The stop loss will be set at $32.3, just below the support level, to protect against a significant downturn. The initial target price will be $38.2, aligning with the forecast for April 7, 2025. To refine the strategy, we will incorporate the Bollinger Bands. If the price touches the lower band, around $29.9, it signals a potential oversold condition, strengthening the long position. If the price reaches the upper band, around $42.2, it suggests an overbought condition, prompting us to take partial profits at $39.4. The final target price will be $38.5, based on the forecast for April 8, 2025. This combined RSI and Bollinger Band strategy aims to capitalize on the upward trend while mitigating risk through strategic stop-loss placement and profit-taking at key resistance levels. The portfolio will prioritize the long position based on the RSI and Bollinger Band signals. Based on the historical data and forecast, PAX Gold demonstrates a declining trend. The recent RSI values have fluctuated, but the forecast suggests a potential oversold condition with values dropping to 44.7 and then further to 2,920. Considering the support price of $3,000, we will implement a contrarian strategy. When the RSI falls below 40, we will enter a long position at $2,920, placing a stop loss at $2,870 to mitigate potential losses. The initial target price will be $3,000, aiming to capitalize on a bounce from the support level. To refine this strategy, we will incorporate the Bollinger Bands. If the price touches the lower band around $2,870, it could indicate an oversold condition, reinforcing our long entry. The upper band is around $3,170, which could serve as a secondary target. Therefore, we will adjust the target price to $3,000 initially, and if the price continues to rise, we will reevaluate and potentially increase the target towards $3,170. This blended approach, combining RSI and Bollinger Bands, aims to maximize potential returns while managing risk effectively. Based on the historical data and forecast, just exhibits a sideways trend within the support of $0.029 and a resistance of $0.0314. The RSI fluctuates between 45.4 and 54.0, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show that the price has been oscillating around the middle band, with occasional touches of the upper and lower bands. The forecast for the next week suggests a continued sideways movement, with prices hovering around $0.0307 to $0.0309. Given this analysis, I propose a range-bound trading strategy. The entry price for a long position will be $0.0302 when the price touches the lower Bollinger Band. The stop loss will be set at $0.0295, just below the support level and the lower Bollinger Band, to limit potential losses. The target price will be $0.0314, coinciding with the resistance level and the upper Bollinger Band. For a short position, the entry price will be $0.0314 when the price touches the upper Bollinger Band. The stop loss will be set at $0.032, just above the resistance level and the upper Bollinger Band. The target price will be $0.0302, coinciding with the support level and the lower Bollinger Band. This strategy aims to capitalize on the sideways trend by buying low and selling high within the established range, with strict risk management through stop-loss orders. Based on the historical data and forecast, NEO exhibits a clear downtrend, with consistently decreasing prices and a forecast predicting further decline. The RSI consistently remains below 30, indicating oversold conditions, while the Bollinger Bands show the price nearing the lower band, reinforcing the bearish sentiment. Given this, a short position strategy is recommended. We will implement a tiered entry approach. Initially, enter a short position at $4.53, placing a stop loss at $4.73 to protect against a potential reversal. The first target price will be $4.05, aiming to capitalize on the initial downward momentum. Subsequently, if the price reaches $4.05, we will adjust the stop loss to the entry price of $4.53, securing some profit and allowing for further gains. The second target price will be $3.86, based on the forecast. If the price hits $3.86, close the entire position. This strategy combines RSI oversold signals, Bollinger Bands confirmation, and forecast data to maximize potential returns while managing risk through strategic stop-loss placements. The support price of $4.6 acts as an additional safety net, reinforcing the bearish outlook. Based on the historical data and forecast, DeXe demonstrates a downtrend. The RSI consistently remains below 50, with periods of oversold conditions, below 37.0. The Bollinger Bands also indicate a contraction, suggesting increased volatility. Considering these factors, I recommend a short position strategy. We will enter a short position when the price touches the upper Bollinger Band. Specifically, we will enter a short position at $14.3. We will place a stop-loss order above the upper Bollinger Band at $14.6 to protect against unexpected price spikes. The initial target price will be the support level of $13.6. To refine this strategy, we will incorporate the RSI indicator. If the RSI reaches an oversold level below 20 during the downtrend, we will tighten our stop-loss to $14.8. If the price reaches the target price of $13.6, we will consider taking profits or adjusting the target price based on the next support level. The forecast data shows a continued downward trend, supporting the short position. This portfolio combines the Bollinger Bands and RSI strategies for optimal risk management and potential high returns. Based on the historical data and forecast, Kava has been in a downtrend, consistently testing the support level of $0.387. The RSI has been fluctuating below 50, indicating weakening momentum, and recently entered the oversold territory with readings below 40. The forecast for the next week predicts continued downward pressure, with prices hovering around $0.387 to $0.402. Considering the current trend and technical indicators, I recommend a short position with an entry price of $0.402. Place a stop-loss order at $0.42, just above the recent resistance level, to limit potential losses if the price unexpectedly reverses. The initial target price should be $0.387, aligning with the established support level. To refine the strategy, we'll incorporate the Bollinger Bands. The price has been consistently trading near the lower band, suggesting a potential for further downside movement. If the price breaks below the lower Bollinger Band of $0.388 on April 13, 2025, consider tightening the stop-loss to $0.398 and setting a revised target price of $0.358. This adjusted strategy capitalizes on the continued downward momentum and provides a more conservative risk management approach. This portfolio combines the RSI and Bollinger Band strategies to maximize returns and minimize risk.